Well, good morning. Hello and welcome and welcome and hello and welcome. Thank you for joining me on this very special early AM edition of Un Poco Mas, the show where we give you just a little bit more. Sorry, I am completely disheveled. I'm about 99% still asleep, but I wanted to go ahead and get up and watch. I already watched last night the Tannor Gary interview part two, and I felt like Tanner went in with the more specific intent to kind of push back on some of the, I would say, more dishonest, disingenuous kind of FUD arguments that Gary Gordon sort of cherry picked for this latest article. And I think Tanner made a couple of really good points in there, but I think the main one was that if you yourself say you have no hope of understanding the tech business and you're not even going to try to understand it, you're like, oh, I tried, I looked, I did research, but I'm more of a mortgage lender type of guy. I've been doing this for 30 years. Haven't you heard me? Let me give you one more anecdote about the old days. And it just sort of went on in kind of a circular fashion with Gary attacking sort of different parts of the books that he found troubling, and Tanner pushing back with facts, and it just kind of went that way. I don't, not going to play their article, but just wanted to go over their points and, of course, go over some general SoFi information. SoFi Technologies Incorporated, ticker symbol is SOFI, and it was really funny. In this article, Gary, I'm closer to shorting the stock. I absolutely guarantee you this guy does not have the minerals to short SoFi from 7. Never gonna happen. I would love to come on for I'd love him to come on for that third interview and just show that big juicy short position, because it's just not gonna happen. Because this is essentially a hit piece, and just go through a few points while we're talking about the SoFi stock. The stock is up 1 penny in the pre-market to $6.93, which is absolutely irrelevant. Let me go ahead and share my screen. I don't really have anything to share. This video is completely pointless, but let's go ahead and do it anyway. Guys, thank you for tuning in. It's Un Poco Mas. We're talking SoFi stock. Ticker symbol is SOFI. I'm trying to get my crappy computer to cooperate here. Of course, it doesn't want to. It's going psycho on me. It's like booting up, sending me a bunch of pop-up ads. What the hell else do I have going on here? Let me get rid of this. And this is the deal right there. So let's go ahead and share the screen. There's a couple other things I wanted to mention, like with regard to yesterday. Obviously, the algo was in full control, and I didn't get a chance to come on after the bell. So after the closing bell, excuse me. So showing an additional 5 million shares going out on loan, minimal uptick in the short interest up to 19% of the free float. And again, they weren't really discussing price action, but here's the thing. If you're going to rate a company a strong sell, you have to have some reference to the stock price there. I mean, is SoFi a strong sell at 5? Is it a strong sell at 7? Is it a strong sell at 10? Is it a strong sell at 15? I mean, he was toying with the idea, he's like, well, depends how you look at it. The stock's worth, 80 cents on an earnings basis. He's just like taking, this year's earnings. And he's like, well, on that basis, the company would be worth 80 cents. But, I'll go by book value and the company is worth, $3 to $4. Whatever. He's like, you just have to start there. And Tanner was, pushing back and saying, like, look, if you're going to write this type of piece, you don't have to write about SoFi, but you're coming out and you're saying, I don't really understand the company. This isn't really my space. If you just value it as a bank, banks are valued, not much over book value. Then he compares them. So the incredibly sort of dishonest intellectual gymnastics that he went through for his article was basically that, you take 2023 numbers. He's like, because you didn't look at the numbers, you look at it as a snapshot and you sort of pretend dishonestly that SoFi is a mature company. So you price in zero for tech, you price in zero for the growth, because again, in his mind, growth is bad because SoFi's burning money to grow. But in reality, that's not what's happening. In reality, Anthony Noto is a great executive and the SoFi management team is a great management team, and they've been able to strike that balance between guns and butter quite effectively, where they grow rapidly but also work toward their long-term margin goals and also make money. So that's what really doesn't make any sense. If SoFi is able to grow, say, 25, 30%, and they're able to drive toward their long-term margins of, 30% and 20% to the bottom line, what difference do some of these ancillary issues make, such as where you attribute certain costs? I mean, Tannor was also making the point, some of these, parts of SoFi, the financial services, even the banking as their own bank, they're basically in their infancy. They've been around a couple of years. Organizational structures, as I'm sure Gary knows as a professor and a guy with 30 years as a stock analyst, just so impressive. But as he knows, organizations and things like that take time to form. So there's going to be some crossover among these divisions, particularly on the tech side. I'm not going to say I can unpack where $1 billion in uncategorized expenses is, but the bottom line is, if you're making money on a GAAP basis, that should be satisfactory. It's like, well, no, GAAP's not everything. You have non-cash items. And I respect the fact that he wants to drill down into the numbers, but he's, talking about doing it, but he didn't do it. Because if you're going to take management, at least, challenge their assertion that there's going to be a lot of tech on the financial services and the tech side this year to make up for them pulling back on the loan risk and the loan originations, then it is incumbent on you, if you're going to rate the stock, to actually take a look at those divisions, what they do, how new they are, how rapidly they're moving toward real profit, real cash flow. I mean, I don't know. This piece made less sense to me than the last piece. So, it is what it is. But again, I'll go through point by point. I wrote it. I wrote everything out here on a paper plate. This really annoys Princess J when I write things where I'm not supposed to. Why not use a piece of paper, guys? Because I had this paper plate in front of me. And I was enjoying some delicious fruit, so I thought, why not reuse, recycle, repurpose, and go ahead and make my un poco mas show notes on this plate. Anyway, guys, let me say hello and welcome and hello. Who do we have joining us here this morning? We have Mikkel Hagen, Noto on Kramer today. Yes, guys, you'll remember almost every single quarter, SoFi trots out LaPointe or Noto most of the way through the quarter. And essentially what they're doing is they're either reaffirming guidance or kind of with a wink and a nudge raising guidance. And they're just telling us where they're going to be this quarter. And almost every single quarter, they're going to sort of reaffirm the guidance, which I think means, they're coming in with a beat. My guess is that although Kramer sort of alternates between gushing about SoFi and attacking SoFi, he really obviously likes Noto. They have a good rapport. It looks like to me Noto can't stand Kramer, but Kramer, loves Noto like a big brother or something. So I don't know. Kramer, I think, has a lot of emotional problems. Honestly, he's all over the place. I've never seen somebody's like, "What's going on with SoFi?" He's like, SoFi's the greatest thing since sliced bread. I've known Anthony Noto 30 years. He's, it's just like so all over the place. It's really hard to get a read on how he actually feels about stocks because, I don't know, his calls and his research is so lazy. I mean, I think for that charitable trust he does so well with, he must have somebody, investing the money for him who goes a little bit more in depth. Perhaps he has whoever's leading that investor club that sends out those brilliant emails. But anyway, SoFi, it's a bank, not a technology company, but one that can make a difference. Tangerine Capital. The points in this article, guys, if you feel like reading it, this does a lot of refutation of what Gary's talking about with the value of the company, because how can you take a company that just started being a bank a couple of years ago that's growing rapidly? I mean, if you saw a Stock Goats video, and Stock Goats been absolutely tearing it up on Twitter, but SoFi is now the 71st largest bank by assets, just jumped up, I think it was another 7-8 spots. So that tends to happen every single quarter. We're seeing SoFi move up and up and up the list. And the empirical evidence that SoFi is growing while making money, while increasing their margins. Another argument that is just so disingenuous, and I'm hearing this, a lot from the bears now, is that, wow, you'd expect with their digital model without any branches that they'd have lower costs, but that's just not the case. See, I'm looking at the operating costs here for the banking, and it's actually higher. It's normally, I was looking at, I forget what bank, he's like Wheaton Bank or something, this bank I'd never even heard of. He's like, their operating costs for the bank are 1.4%, and with SoFi, you're at 1.9%. So SoFi's bad, compared to a traditional bank. It's like, come on, man. Is that really what you're going to trot out here? Is that the best you've got? SoFi Bank is brand new. The thing's a couple years old. And I mean, I get he could make that point that, hey, it's unproven. I mean, that's more of a valid point. But to say the expenses are too high because they're half a point higher than some other bank that's probably, established for decades. I could look this bank up, but it would be a lot more fair to compare SoFi to a bank that is, a couple of years old and is growing rapidly and is, moving, and the company in general is making a net profit. It's like, if the argument is you're burning money to get this growth, then why isn't SoFi burning money? I mean, if your argument is basically that SoFi is going to go bankrupt because all these companies in this sector that I've seen over the last 30 years are going to go bankrupt, that's an argument you can make. Like, hey, I've seen this a lot. I've seen a bunch of companies grow rapidly and they almost always go bankrupt because, growth isn't good. But the thing is, if you combine growth with margins and profit, it is good. And if you have a business model where your marginal costs are going to be low as you add new members, add new revenue to the top line, because you don't have any branches, you would think somebody with that man's intellect, that patented Gary Baba Booey style intellect, I just don't see it. I just don't see these arguments. But we'll go through this article really quick, and then we'll go ahead and run through the paper plate. As far as the charting, I believe, the cleverest trick the devil ever played was, being able to convince retail investors that SoFi has broken back down below support level. It's very true that it broke way down below this level, that it reached sort of on the initial pump after the low back here in November. But I believe this line that was resistance all the way back to, at least September 2023, and we had 3 pops off the top. That is now functioning as support, that very same line, one in the same. And this is what I always think, guys, when they're trying to really shake retail out of a stock and, they're going to flip it, the institutions are going to flip it and go long. What do? You see them bang the stock over and over off of the support line, and it actually often goes down below the support line. And this is where, retarders will often panic. But What do you see in this, since this major dump up here? You see two tests to the upside, and this line looks really good, but you see once it actually breaks down below the line, twice, three times, another huge dump. We see a fourth test, then a fifth test, and it's kind of, you know, trying to find support at the line and struggling to do so as we bleed sideways and down. But I just don't think the chart is anything to worry about. I think the algo is on this. It always bleeds the stock sideways and down, and then it seems to leg up. So just since the last big pump, we've had three huge gap downs, and this induces panic. It causes retail to sell at the lows, and obviously, what do market makers want you to do? What do I think Gary Gordon wants you to do? They want you to, sell the dip and smell the rip. Because I think anybody, who's a math professor with this type of brain can see that this stock, at least over the midterm, has a really positive growth trajectory, has a really positive profit trajectory. It's he's like, look at the EBITDA. It's like a lot of people would say, SoFi was never even going to become EBITDA positive. It's going to become bankrupt. And if you look at that trend, the folks like you and your ilk were absolutely wrong. And SoFi is rapidly becoming more and more profitable. Now, in fact, they're making a net profit. I would bet dollars to donuts that Anthony Noto is going to come out today on Kramer and, reaffirm that they're going to make a net profit. And I would guess he's going to hint that there's going to be some really good growth out of this, NBA announcement. Obviously, the key to the valuation we're looking at is tech. I mean, everyone says that. Even the bearish analysts, they say, the key to get the valuation that SoFi investors want, obviously SoFi management wants, is the tech side. But again, same as last time, you had somebody, Gary, who's putting a strong sell on the stock, writing multiple hit piece articles that are sort of coinciding with periods of major sort of shorting on the stock that we can't figure out really why they're shorting the stock. I guess the FUD he comes up with, you could call that a short thesis, but he's basically picking apart the books for 2023 and saying there's, troubling things in here. There's things I don't understand. There's things I'd like to unpack. Tanner's pushing back. It's like, hey, have you ever heard of Control F on your computer? Like, you can run through this 10K and just find these critical terms. He's like, well, you can't find the charge-off data anywhere. Like, it's not there. He's like, well, it is there. It's just, it's in a footnote, whatever you're saying, but it is quite easy to find, and it's much discussed. And in fact, I made a video about these things, so I find it, not only do I have these numbers you're talking about that you can't find, but they're quite easy to find, and anybody analyzing the stock is going to be able to find these numbers and watch my videos, watch a whole host of other people's videos. And he's talking about, when I go deep inside some number that maybe I don't understand, I go to other people. So, I felt like Tanner makes a good faith effort to look at the pros and cons of SoFi's numbers, and he goes extremely in depth with the numbers. I felt like Gary Gordon went the complete opposite way. He didn't look at the upside of anything, didn't look at any pros, didn't assign any value to growth, didn't assign any value to tech. And in fact, it was quite telling when they were talking about SoFi. He's like, well, SoFi's just had tailwinds at their back as a consumer lender the whole time. Tanner almost was like laughing. Tanner was smirking at this guy because he's such a clown, quite frankly. So arrogant about his experience, and I think, really talking down to the SoFi investor because, he's done this 30 years. Another point in the interview was like, they were talking about why is SoFi attracting deposits so quickly, because, American Express pays a very high rate, Discover Bank pays a very high rate, Ally pays a very high rate, but SoFi is attracting customers, and those customers are actually signing up for direct deposit at freaky high rates. That's leading to a lower cost of lending, leading to greater net interest margins, etc. And I think the comeback was basically a complete word salad that just again, didn't make any sense. So again, Tannor was trying to, prod with numbers. So what about these numbers? These numbers look extremely positive. Wouldn't you agree? And every single time, it's like, no, I wouldn't agree. He's like, but these are the numbers. I mean, like, you can say they're not a long data set because SoFi's only been public for so many years. But if you look at this trajectory, it's obviously good, right? He's like, no, growth isn't good. The net profit isn't good. It's not impressive. Anybody can pump numbers once, but when Noto comes out and says it again for this quarter and again for this quarter, he's like, listen, I might be proven wrong because, my thesis is very, very thin. It doesn't really make any sense. It ignores, major pieces of the company just because, I'm too lazy to do research for this article. He's even said, like, this isn't, I don't really understand the company. I'm a value investor. He's like, people say I'm too old to understand SoFi. It's not that you're too old to understand SoFi. It's that your mindset, your way of thinking, does not allow you to see the value in a company that's doing something. He's like, what are they doing different? Because there's only two ways they can acquire those customers, either that they're just paying for them or that they have some kind of special sauce that I don't see. And a lot of the interview was kind of going back and forth, looking for that special sauce. And it's like, why is SoFi able to show such consistent growth? They got into talking about, hedging for interest rates. Noto's hedging everything. And one of the things, that became like super clear to me while I was watching this video, and I actually watched it kind of twice because I was watching it earlier and then later. But one of the things that became very, very clear to me is that Anthony Noto is a lot smarter, in my opinion, and understands SoFi, understands what he's doing a lot more than Gary Gordon. I feel like he took sort of a Hurricane Lopez overview of the company. He dug into the 10K, and he just latched on to certain things that he found problematic. But you have to remember the way SoFi reports things, their accounting structure. I don't think they ever really planned on being a bank. I don't think they ever really planned on going into the consumer lending business the way they did. Remember back when SoFi's, executive team made these initial decisions on how they're going to structure things, they were not in these businesses. They were, almost all student loans. And of course, they discussed how COVID upended that, and it was an amazing pivot that management did. Again, completely ignored. He's like, it's just a bank. If I'm going to value it as a bank, we value it at book value. We start from there. And, Tannor pressed him, if you're going to write this type of article, isn't it incumbent upon, if you're going to say sell the stock, isn't it incumbent upon you to, at least in your mind, establish some kind of fair value? Like, researchers, when he was reading the report at Morningstar, moved the fair value from like 14 to 15. I saw, for instance, this article, the guy runs his DCF model, whatever it is, he comes up with a fair value of 15. So, sort of throwing out that SoFi is worth anywhere between 80 cents and $3, depending on how you look at it, is, again, I would say it's basically dishonest FUD, because you have to price in the growth. To say that growth is just a negative, even though you're making better profit margins on those additional marginal dollars coming in, it's just the opposite of reality. Like, every single one of these growth stocks, like, basically says it. He's like, I just don't believe in growth stocks. I'm a value investor. Like, I don't believe in risk. I don't believe in looking forward. I only believe in looking backward. He's saying these things. So it's like, you just don't seem like the right guy to cover this stock. You don't seem like you understand it. You don't seem like you want to understand it. So then that sort of begs the question, and Tannor did a really good job here too. He's like, why even write the article? Because, you don't really seem to be in touch with the space. And moreover, you don't really seem to be negative on SoFi. You seem to say it's too young. You seem to want a wait and see approach. You don't think there's enough data. You don't think management has proven anything. And he's like, well, but doesn't management get credit for establishing a track record where they're, exceeding expectations, where they're sort of working the plan perfectly that Noto laid out 6 years ago to become, a one-stop shop. And, it gets back into the, hey, mega banks can do it better. He's talking about, Bank of America has Erica. He's talking about Capital One, mentioned AI 40 times in their last report. And it's like, they can mention it all they want, but Bank of America still, has a lot of issues. Yes, they make money. He's like, I'd rather put my money into consumer lending business at Bank of America. He doesn't talk about the massive write-downs, Bank of America just, had to take, because their management was essentially, in my mind, incompetent, just locking in these, very low bond rates for way too long, just making a false assumption that interest rates were not going to go up. So, if you want to talk about some of these mega banks, be fair about it and acknowledge the fact that Anthony Noto and team have probably navigated these waters a lot more effectively in terms of hedging risk, in terms of predicting the future. And that was another big, sort of, I don't know, he's like, management's telling you, that EPS is going to be whatever, 55 to 80 cents in 2026. And then his argument is like, forecasting is inherently risky and unreliable. He's like, management has no idea what's going to happen into 2026. How can they I mean, come on, guys. This is a ridiculous, stupid argument. This is what management does. They have to forecast. How else are you going to run a company as a chief executive if you don't at least plan for contingencies, the best case, worst case of what you think is going to happen over 2 years? Gary Gordon's like, 2 years is way too long for strategic planning, because you just can't predict the future. Like, you don't know what's going to happen. That's literally his argument. Management can't predict the future, so why bother to try? Why look at management's numbers? Why put any credence in management's numbers? I mean, yes, they've been accurate so far. Yes, they keep exceeding expectations. Yes, they're working their plan perfectly. Yes, they're executing, but it's just no credit. It's just glossed over. It just doesn't really make that much sense to me. Anyway, we'll go point by point over the plate. We'll go through our tile. We're talking about Simple Jack being a bad actor. It just seemed like the scary guy's doing a bit. It just seemed like his articles are lazy hit pieces that cherry pick negatives, as Tannor noted, and just completely ignore all the positive aspects of the company. If the company is so bad, if it's burning so much money, if it's incinerating money, and the growth is going to drive it into bankruptcy, why did they just start making a GAAP net profit? Why is management telling you they're going to make a GAAP net profit this year, this quarter, and every quarter this year, and next year, and that profit's only going to get larger and larger because the business model's brilliant and the growth story's intact? And facts are stubborn things. A lot of times in politics, they say you're entitled to your own opinion, but you're not entitled to your own facts. The way sort of a weasel around that is just, if you have 10 facts, you just pick the 1 or 2 that are negative and ignore maybe the 8 that are positive. It's just one way to go, but I think it's a very sort of disingenuous way to attack a company. I mean, I don't know, obviously Gary Gordon is, far smarter and more experienced than me. He's 30 years a stock analyst. Just ask him. He'll tell you over and over again like a broken record, particularly when his arguments don't make a lot of sense. Like, one of the things they were talking about is, attracting depositors, direct deposit. And, Tanner's like, well, SoFi is paying it's only the direct depositors. They're paying 4.6%, and this leads to cost savings over their warehouse facility. So even if they're paying, 4+%, it's still going to be cheaper than borrowing the money from a warehouse line by far. They're telling you, like, however we do this, we save 2 points, because they're charging more on the personal loan side, or whatever type of loans they're originating, also due to the higher interest rates they're paying. And then if you look at the spread versus Bank of America, I remember when Deadliest Catch Chris from the SS was data-driven investing, he went over this and compared them to Bank of America, how the spread on their loans were. And the SoFi, what they're making on loans just is absolutely dwarfs what Bank of America and the other mega banks. In fact, their spread was bigger than B of A's top number. So they're making a huge amount of net interest income. And that was what the argument came down to basically this time from, Simple Jack, was that last time he's like, look, it's not a growth industry. It's like consumer deposits only grow 4%, consumer credit only grows 4 to 5%. Therefore, you can't be a growth stock. Your growth is maxed out. And Tannor was like laughing at him at this point. He's like, well, of course they can, because they're in this massive established industry and they can take existing market share. And that's exactly what they're doing. And they can do that infinitely for decades without even really putting a major dent in these big banks. I mean, even if you say SoFi is going to grow at a CAGR for the next 5 years of 25%, that puts their, top line somewhere 8 billion. If you say, 20%, it's like 6.6 billion. If you say 30%, it's like 10.8 billion, whatever it is, kind of projecting this out through 2029. The growth story here is incredible. And if you look quarter by quarter, probably the most impressive aspect of the SoFi growth story is the consistency in their earnings. I mean, other companies you see, whether, it doesn't matter if it's Robinhood, Affirm, Upstart, some of these other banks, regional banks, they're all over the place. I mean, SoFi's earnings, whether you look quarterly, I mean, last quarter was just incredible. I think SoFi is going to hold on to some of that momentum. I think that's one of the things shorts are counting on. They're like, yeah, this was a great ER, but it's a one-off. SoFi is basically going to fall apart. Q1 has historically been a little bit weaker than SoFi. For SoFi, Q4 has been strong, but I just don't think you're going to see that. I think you're going to see SoFi go from strength to strength on this NBA deal. Very good member growth. I think, profit is going to be actually 3 cents. I think it's going to be the very top end. And these analysts saying, SoFi is going to make 5 or 6 cents all year. That narrative is going to be done. That narrative is going to be done and dusted once you basically see Q1, which is supposed to be so weak. It's supposed to be such a letdown. I think the loans, I don't think the defaults are going to be that bad. I don't think the SoFi customer has by any means fallen apart. Apologies, guys, for my ramble. I'm just extremely tired, got very little sleep. Hello and welcome. Let me move my giant head down there. Welcome and hello. Mikkel is here. We got to Mikkel. Who else is here? Lorraine. Lorraine is signing in and out. She doesn't have a charger. Can we as Unpoco Moss family band together and somebody get Lorraine a charger? Thomas Puzak, hello and welcome. T-Poo. Frumbler is here. Welcome and hello. Matt Flo is here. Of course, Nautilurker. Good morning, Nautilurker. Thank you for producing the show today. Guys, it's Un Poco Moss, the show where we give you just a little bit more. Matt Flo is here. M. Russo's here. Hello, M. Russo. Low Country Luton Pawn is here. Welcome and hello, Low Country Luton Pawn. If you guys need any, you can't sell any more blood and semen and you need more money for SoFi shares, go ahead and take some of your valuables, maybe your grandmother's television set, down to Low Country Luton Pawn. See if you can get you some money out of K-Man over there. Bobby Joe, good morning, Bobby Joe. Ryan Cheney, volume. Sorry, I have to kind of talk quietly. People are asleep, Ryan. So you turn up your volume, and I'll go ahead and talk just a little bit louder. I'll give you just a little bit more volume. How's that, Ryan? Kind of lean into the mic just a little bit. Increase the position to 4,700 shares, trying to get to 5,000 shares before SoFi leaves the 6 to 7 level. Good on you, David M. I think you're getting at a good entry point here below $7. Very, very strong. Good judgment there from David M. 30 years. Gary's face bothers me. Maybe it's just the camera angle, but it seems to me, yeah, I mean, M. Russo, I feel the smirk is condescending, but the moreover, the content of what the guy's saying is just, it's so dopey. It's so goofy. He's like, well, there's only 2 sentences about technology and I don't understand it. What do? They sell some kind of software. And it's like, yeah, okay, buddy. Go back to sleep. We'll wake you up in another 30 years and come out and blast a great company. It's like, this is where you need to play the carp company, the carp, rant. It's like they attack great American companies, these short sellers, these cokeheads. He's like, people are saying I'm too old to understand SoFi. No, you're not too old to understand SoFi. You're telling us you don't believe in growth stocks as a construct. I would never buy this kind of enterprise. Like, how could I value an enterprise like this? I would have to look into the future. He's like, the only way I'm allowed to value a company is to look at this year's books, do a multiple, and I think, SoFi's worth $3, whatever it is. He won't even give the number. Like, how can you tell your readers is a responsible journalist or stock analyst of 30 years experience of this, amazing reputation, a math professor, the guy's, obviously quite intelligent. How can you put a strong sell rating on a stock but not, formulate an opinion as to what a stock is worth? It just doesn't make any sense. It's incongruous. One thing doesn't follow another. But anyway, guys, these are the types of hit pieces. This is what I'm always talking about with the FUD spreading turds on SoFi. These are these calls from, like, if you actually drill down into the negative bearish calls, they don't make any sense. And that's because fundamentally SoFi is doing so well. They're so strong. Management is executing the plan almost to perfection. And the projections that SoFi gave us years ago, people are saying some of the numbers, they're like 1 year behind. But if you look at other growth stocks, other SPACs, other new companies in SoFi's position, I think by comparison, SoFi is absolutely killing it. The only other thing I could even look at that might be more attractive, again, Tannor was talking about this, might be Nubank. But again, I don't like the regulatory environment in Latin America. I just don't feel it's as stable. And that's why in my last video, I talked about SoFi is my number one growth stock for this decade. And, I stand behind that. And after this interview, I'm really more convinced than ever that a lot of these bearish people who write these articles, they're simply paid to write a hit piece. And, it's like, he sort of vaguely said he didn't have a short position, that he would think about shorting, definitely short before he would buy. I don't know, guys. I don't think there's really been any sellers since GAAP net profit under 8. I think it's absolutely all been shorting, and I think the numbers bear that out. If you look at yesterday, guys, I mean, they borrowed like 10 million shares in the pre-market. Okay, of course, they returned these all overnight, so they only borrowed a net of 1.5 million yesterday. Again, they're controlling the price action during trading. And then again, today in the pre-market already borrowed an additional 2 million shares. So you can expect them to hit the stock right out of the gate, because obviously they're looking to kill the substantial number of calls at 7. A lot of puts opened up at 650. So this is what I told you guys 2 videos ago. This is what I told you the last video. Stop buying shares on Monday. You are feeding the market makers money. They want to do that little push up on Monday. So don't buy on Monday. Like, don't feed these guys. Don't work their plan. Have your own plan. Like, if every week on the weekly charts they're pushing stocks down to kill options on Friday, and you see the low point of the week, or at least, very equal to the low point of the week, always comes late Thursday and Friday, why not buy then when the stock's at the low? Why rush in to buy Monday, particularly when, you might have bad news, and, this inflation number might be another reason, or the Fed meeting might be another reason to go ahead and hit the stock. So think strategically. Don't buy stocks every day if you're a long-term investor. It's not a good strategy, because you end up making these emotional decisions on FOMO, on announcements. Take your time, guys. Buy stocks, once a week at the very most, more likely once a month if you can. Just get your money together, get a plan together, plan your work and work your plan. You'll be a lot happier. It takes the emotion out of it. Have a plan. If you're a long-term investor, you don't really need a specific trading plan, obviously, because you're not trading. If you are a trader, get help, seek help. It's probably not going to work for you. Probably reading like IBD or Market Smith or something. It's like, oh, Nvidia is entering a buy zone. It's almost in a buy zone. Buy now. It's like so many of those are just really bad. Those, swing traders are just sort of day traders with a slightly longer time horizon, but at least day traders are kind of picking in and out of the. I feel like swing trading is, this sort of short-term market timing around earnings, around catalysts. You just never know. Are they going to dump and pump? Are they going to pump and dump? Is something positive going to be interpreted by the media and analysts and turn into something negative as a reason to sell off the stock? The bottom line is, guys, the reason, buy the rumors, sell the news, the reason that phrase is so prevalent with investors is it just so often happens. Like, they suck people in on the lead up to a catalyst, and then when the catalyst actually hits, the market makers have made their money on the run up. They sell off. Retarders are buying the top. They drive the price back down. Retarders panic, sell at a loss. Market makers make that spread on retail's losses, and they just repeat that over and over and over again until we're blue in the face. Anyone? Yes, that was Ferris Bueller Day Off, obviously a fan favorite. Sorry, guys, if I'm a little bit quiet, but it is Topper time check, 5:42 a.m. out here in a beautiful sunny Los Angeles. Benji chatting with Not a Lurker, the Rim Shaker. Did Noto sell a few days ago? His Form 4 listed some transactions. Yeah, I think if anything, it was for tax purposes. I saw Rochelle selling. I think every quarter they vest more stock in the... and then I saw Rochelle selling, I could actually, let's see, I could actually go back and take a look at these forms because I do read them all. I saw TNB Asset Management, Boost Holdings in Sofi Incorporated. This was Rochelle selling. That was Form 144. I didn't see that form for Noto. Yeah, Form 4, this I think is what you're talking about, but I don't think this is for like an open market sell or a pre-planned sell. I think this is for just tax to pay for the compensation, if I'm not mistaken. But yeah, I'm not seeing any selling. Yeah, these are restricted stock units, number of derivative series acquired or disposed, common stock, amount of number of shares, price, derivative security. So yeah, if you look at like, this is what usually happens is like stock in, stock out, and some shares are sold to pay the taxes on the compensation, just to make it very simplistic. But in terms of the short volume ratios, institutional ownership, if you look at SoFi, I think institutional ownership is now probably in the low 40s, and there's a lot of insider ownership. Unfortunately, Chamath has a ton of shares. Fortunately, Noto and management, other management also has a ton of shares. So with insiders, you've got more than 50% of the shares off the table. Then with the senior secured note deal, if you listen to Uncle Bruce, there's another 100 million plus shares sort of going off the market. I think a lot of retail investors, if you're smart, you just wouldn't sell a single share under $10 and sort of ignore the FUD from Gary Gordon. Because it's all FUD, guys. If you listen even to the analysts who are making negative calls on the stock, such as Kevin Fudler with Piper Fudley, he actually raised his 2025 EPS estimate on the stock. So it's very strange that you get a haircut. But again, he's, I think, very sort of bearish, pessimistic outlook. I think the 650 guys are almost unrealistically bearish. I think they're pricing in just too many headwinds. I think Noto is already extremely pessimistic in terms of his bear case sort of for the company, what he plans for. I think Noto really, really plans for the worst and doesn't even expect the best. I think he just sort of plans to do the work, and he feels that the rest is going to work itself out. But, Gary Gordon was talking about effective hedging against interest rate fluctuations. Noto hedges everything. The guy is an absolute master deal maker, and he is more on top of this, I think, than any other CEO you could want. But guys, welcome and hello. Didn't really have that much. This show is kind of going out with a whimper, but I do want to go over my paper plate and just go over sort of a point-by-point refutation. I don't want to pay the video. Gary Gordon makes the bear case laughable. Yeah, that's what I thought, Ryan, too. I thought Tannor the whole time was just almost about to break out laughing because of how stupid some of the stuff Gary was saying was. I mean, it's like, are you and I talking about the same company? Does this apply to Sofi? All of your arguments basically presuppose that Sofi is a mature company at scale. That's what you're looking at it like with these EPS multiples. Like, he's like, well, if you go out to 2026, you just simply can't know anything. You can't know that you're going to grow. You can't project anything. It's just impossible because there's so many unknowns. Like, does Anthony Noto, Sofi Management, they don't have a crystal ball, but then you just take away the entire role of managing a company. Like, why would you plan for the future at all? I mean, why would you try to project numbers? It's just, why bother? It's just a futile exercise because I can't do it. And if I can't do it, nobody can do it because the only way to invest is a value investor. And it's like, not everybody shares your opinion. I think they at least agreed on one thing. It's just that they have a fundamentally different outlook in terms of investing. But let's just take a look, guys. Anything new on the tip ranks front? No new rankings. Still Andrew Jeffrey, 14 with buy. Anytime I see a bullish ranking on the top of this list, I expect a re-rate, except the Chia Pet just re-rated like 2 weeks ago, so he may wait till after earnings. I would guess you might see who the next guy to come out with some FUD would probably be the chipmunk Dominic Gabriel over at Oppenheimer. He likes to throw cold water on the stock when the price goes up. But he's kind of a market timing turd of an analyst, so I don't think he'll come out until the price starts running up a little bit. You could see a few other guys out here throwing a little bit of FUD. You could see the Chodo reiterate. He hasn't reiterated for a while. You could see Morgan Fudley definitely reiterate with Midwest values. That guy, he could take the bolts out of his neck and go ahead and downgrade the stock again to 6. And I think that'll be the next round because you sort of saw the FUD spreading twins who bookended the calls January 2nd, sort of that holiday call from old Michael Perito, the parrot, the bowling ball-headed balding parrot. He came out on his New Year's and Christmas holiday, and he used that time to prepare a sort of, a fuddish note on Sofi. Kind of came out of nowhere, precipitated this massive fall that you saw starting on January 2nd with this call, and was bookended nicely by Midwest Values, making the exact same call, downgrading from 7 to 650 on sort of no real reason. It's just, if you read their calls, it's a bunch of gibberish. But the Gary interview took gibberish basically to new heights. It's like, I'm closer to shorting Sofi. I believe that's just a flat out lie. Yeah, he might short Sofi if it ran up on like a pump, but I don't think so. I don't think there's any possible way in hell he's going to try to short Sofi from 7 down to 3 or 4 or 80 cents. It's just not going to happen. Growth while burning money is not necessarily a good thing. It can be. He went in sort of this, stupid argument about Amazon, and he's like, well, they invented a new business model of trying to drive prices down and drive competitors out of business. Like, they invented that business model. You maybe online, but, you ever hear of Walmart? You ever hear of, like, Gemco? You ever hear of some of these, like, big box stores that did it all? You ever hear of Montgomery Ward? It's just, these things come and go. And if you think that Amazon was the first company trying to put competitors out of business on the basis of price, like, you've been doing this 30 years. And Tannor made the point, well, you probably missed Amazon because you don't believe in growth stocks. You don't believe in tech. Not only that, but by your philosophy, you would have missed everything in, big tech, the FANG stocks. You wouldn't have invested in any of those early. It's like, well, that's just not what I do. I don't look at these enterprises. I don't invest in companies like this. But Anyway, I'm going to go just quickly through the conclusions of this article. I think SoFi has a lot of growth left in deposits, that people like their one app for credit cards, loans, savings accounts, investments, and more. Of course, also, you guys know they have travel, you have life insurance, you have money. And I think the goal of being able to help members with their finances 24 hours a day, 7 days a week is a good strategy. And if SoFi can get enough young people into lifelong relationships, SoFi's banking business will be successful in the long run. Therefore, as a young, dynamic bank that is disrupting the banking industry and combining many functions in one, I see SoFi as an interesting alternative to the established banks, and I also believe that they will grow their EPS significantly going forward. But I do not think a technology multiple is right at this point. And frankly, I mean, to a large degree, I'd have to agree with that because the technology side is just not really making money. Gary makes that point. Both on the financial and the tech side, if you start to assign some of these uncategorized costs, these businesses are not profitable. But overall, on a GAAP basis, SoFi is profitable. Then they get into basically non-cash income, how that's not legitimate, how he'd watch out for that. It's like the whole thing is if your accounting structure is one way, everything fits within that accounting structure. You can look at one thing and go, hey, this is kind of fishy, this is kind of problematic. But then if you look at it, they are following all the GAAP rules to a T. There's, they don't want to look at EBITDA. They don't want to look at GAAP. He's like, hey, GAP's not perfect either. You could have these items. I want to drill down in the numbers. But when he drills down in the numbers, he's like, these things are so hard to find. That was another argument against SoFi that just really, really was so thin and so lazy, stupid, unprofessional. He's like, some of these numbers are hard to find. Some of these numbers I really had to dig into into this document. It's a 200-page document. He's like, well, you're purporting to be a professional, stock analyst. So, he's like, I have something on my computer called Find, and I can just pull up like charge-offs. Like I found it in 1 minute. And by the way, you could have watched my videos. He's like, I'm supposed to be, some kind of SoFi pumper, but I'm going into these numbers in great detail, into charge-offs. He's like, I'm making charts of charge-offs by FICO score. I'm getting into even more granular detail than what you're asking me for. So not only are the numbers readily available and easy to find, but that argument that SoFi's investor presentations are just too bullish. She's like, they highlight growth too much. She's like, when I saw that investor presentation, that's what got me interested in looking more, drilling down into the numbers. But when he drills down into the numbers, most of the criticism is based upon, the numbers are hard to find. I didn't like it. I got out my reading glasses. He's like he's doing with paper. Like literally, he did not understand that there's a search function on his computer. They could have, easily found it. But I don't know, guys. Like, what company that's a growth stock that's trying to bring in, investors is going to highlight what would be perceived as negative aspects on the front of their splash sheet or sizzle reel? It's like none. All companies, if you look at, earnings, are trying to highlight the positive aspects of earnings. Now, are they going to put in notes about pitfalls? Are they going to put in notes about potential negatives, current negatives? Of course. And I think SoFi has been very upfront about, the fact that some of the charge-offs and the late payments are going to return to pre-COVID levels, and that they're planning for sort of worst case scenario, but what they're seeing in the empirical data is not nearly as bad as what they're planning for. So SoFi, again, extremely conservative with planning, extremely conservative with their numbers, extremely conservative with their hedging. This is what you want as an investor. Now, the fact that they're growing, the fact that they're a disruptor, but they're still so conservative and prudent with their numbers where they're already making a GAAP net profit, it just blows me away as an investor, and that's why I keep investing at this company and buying at these levels. I think his target is basically it's the Gary Chiapet wing of the analyst community, the pasty, older, out of touch community. It's like, you're not pricing in growth, you're not pricing in tech, you're only pricing in the negatives, and you're ignoring all the positive aspects of the company. Every time Tannor would point out something that I think, you and I would consider a positive aspect of the company, he's like, nope, that's not positive. I don't look at positives. Like, isn't it at least positive that management keeps exceeding what their expectations. Like, well, these are the numbers that management gives you. They're sandbagging the numbers, but it's not even actually the case. All the analysts are giving numbers. All the analysts are giving projections. It's not just SoFi setting that number. It's the street. So it's just not true. It's like they're beating on those numbers. The last quarter was a blowout. He's like, wouldn't you agree they did quite well? He's like, look, when I went into the numbers, it's just all problematic. The growth is problematic. The costs are problematic. He's like, the operating expenses from the banking side are problematic. Everything's problematic. It's like, well, isn't anything good? And they kept trying to at least get him to acknowledge some of the basic facts that SoFi is doing a lot of things right, exceeding expectations, making money, incredible EBITDA growth over the last, year. It's just the company's really hitting on all cylinders, doing a lot of things right. Now, can they control the macro headwinds? Of course not. I mean, if the macro environment deteriorates significantly, we get into a recession. That's basically what, his argument is like, it's not an interest rate story, it's a credit story. And it's like, credit's what's going to kill SoFi. That's essentially his argument, that weakness in consumer lending, these consumers are going to have to make choices. And Tanner's talking about, okay, well, they have the best FICO scores. And Gary even acknowledged, Tanner's like, well, if you look at the FICO scores are lending, he's like, well, they have to be lowering their lending standards. That's the only way this works, or they're paying too much. He's like, well, they're not, because look at the net interest they're making. Like, this is a profitable business enterprise. Like, well, the growth here is not good, but what if they're making a profit? If they're making a profit and they're going to make even more marginal profit off the new business, why isn't growth good? Explain it to me again. I mean, Gordon Gekko said greed is good. Gary Gordon's saying growth isn't good. But you're talking about growth stocks. How can you analyze growth stocks fundamentally as a construct if you think growth is bad? I don't understand it. How can growth be bad when you're making more and more profits off of that growth? When you're working toward your eventual margin at 20% at the bottom line? If you're going to bring in 20% at the bottom line, and then, Noto talks about that number with a wink. He thinks the bottom line margin is going to be actually a lot better than that, I think, over the long haul. But again, this is just glossed over. Nobody talks about it. Nobody talks about any of the positives. I mean, my view, yes, SoFi does have some weakness. It does have some unknowns. They are trying to sort of hide things from retorters in the investor presentations, and you really do have to drill down on it. But that's nice why you have guys like Future Investing, like Tannor, Tevez, Deadliest Catch Chris, etc. There's a million U-turders out there, but I think they do a good job. Of course, Uncle Bruce do a good job breaking down the numbers. If you look at it, there is risk with SoFi. It's a young company. They are subject to variations in interest rates, recessions, etc. And the argument that the wind has just always been at their back, Tanner's like, look, circumstance tried to put this company out of business. They were primarily a student loan company. And during this last couple of years, they've completely pivoted the business. The banking business is brand new. Again, with if you watch a stock goat, SoFi moving up to number 71 in banks by assets. So they're moving up, they're growing, they're becoming a bigger bank. They're taking deposits faster than just about anyone else, even though there's plenty of other online banks paying as much for deposits. So it's like the whole thing that they don't have any special sauce. Okay, then why are more and more people coming to SoFi faster from regional banks, mega banks, credit unions? Why are they coming to SoFi faster than Discover Bank? Why are they coming to SoFi faster than American Express Bank, at least as a proportion? Why are they coming to SoFi faster than Ally Bank? Why are they deposits growing faster than like Robinhood, for instance, who I think might even be paying more than SoFi? It's because customers like SoFi. That's the special sauce. Customers like the business model. I'm a SoFi customer. I have 6 or 7 products. People like that one-stop shop. And, his argument to that against those deposits as well, my brokerage pays me more than SoFi. This is where it got into sort of showing your true colors as just, I would say, almost an arrogant, elitist, dismissive, I wouldn't say jerk, because, I kind of like the guy. I kind of like his edge. I kind of like his crabbiness. I kind of like his illogical comebacks. I kind of like when he's a little bit caught in a point, like, He just uses some word salad and then says 30 years and then says, I don't know, you can't predict the future. It's like, how can you look at growth stocks? How can you be a growth stock investor if you don't look toward the future? He's like, I just don't look toward the future. I don't invest that way. I only invest on numbers from the past. And that works for him. God bless, but I don't see why that means you have to lash out at SoFi specifically. Okay, you hate growth stocks. You hate growth stories. You hate growth in general. You hate paying for deposits. You hate making a lot of net interest income for some reason. You hate this company that's gone from losing money to executing and making a GAAP net profit. You hate the adjustments. You hate non-cash income. You can pick a lot of things you don't like. But again, this is the nature of the bearish SoFi analysts. It's dishonest, it's cherry picking, and it's pretending not to understand. And that's why I basically said, Simple Jack is a bad actor, because you don't take this guy seriously. Like, he doesn't sound like he's taking himself seriously. He's not going to short this stock. And Tannor, the look on his face was perplexed, disgust, confused. Like, he was trying to basically, I think the question he wanted to ask is like, are you serious or is this a bit? And he's like, well, no, I'm serious. Like, I don't believe in growth stocks as an investor. I'm a value investor. And the space I understand is, the home lending space and the consumer finance space. So I don't understand tech at all. And then he kind of said it like people are saying I'm too old to understand the business. It's not that you're too old to understand the business. Plenty of people as old as you and older understand technology, understand the business. Like, you just don't understand it. So that's kind of the disconnect there. He's like, you're not too old to understand it. You're just too lazy to do the research before you write the article to understand what you're talking about. People should sell, the strong sell. And you're talking about a sell now from under $7. So, you're not talking about sort of the argument that the stock is overheated, overvalued. He doesn't even really go into a valuation argument because he's unwilling to put a fair value on the stock. He's unwilling to put a bear value, bull value, unwilling to put any value. He's just like, hey, let's start at book value, which he doesn't even calculate that. He's like, it would be $3 or $4. And the EPS value should be 80 cents based on the 2024 multiple that Tannor threw out at 11 cents. So, forget the fact that that Piper Sandler, who came out with a bearish note, said EPS is expected, they raised their target from 50 cents, I think, to 55 cents in 2025. So by that point, if they're saying, they're going to be making 12 cents all year this year, they should be making that per quarter next year. And you see this in the EBITDA. If you look at what EBITDA takes out, and then you look at a company that's scaling, you will see that the EBITDA growth in a little bit of a delay is going to funnel down to the bottom line. I mean, it's just math. The guy's a math professor. You should be able to see it. You should be able to see that the stock-based compensation becomes lower and lower as a ratio, as a percentage of sales. All these things are working themselves out. Depreciation, amortization, it's worth, pardon me, less and less and less, but they just don't go into any of those structural elements of SoFi's books that the trends are so incredibly positive on. He just picks on the structure of the report, that it's hard to find things. I'm a curmudgeon. It's like Larry David criticizing, like, I couldn't even find the adjusted, I couldn't even find the charge-offs. He's like, well, they're right here. You just have to search for charge-offs. Like, oh. It's not hard to find if you want to find it, but if you're looking for something desperately to complain about and write a hit piece and hit the company, you've definitely come to the right place. Guys, let's get a check of the exciting pre-market action. Market's going to open up in about 26 minutes. It's 6:04 a.m. Topper time check, 6:04 a.m. March 20, 2023. The stock is up a whopping 2 cents in the pre-market, 0.29%. NASDAQ futures very slightly green. Other futures very, very slightly red, looking at a neutral day. SoFi, guys, the options just don't look good this week. As I told you last week, 2, 3 more weeks, I think the options look bleak, and then I expect the price action to reverse and move up into the ER as it often does. I think even the bearish analysts that are spreading the FUD far and wide, sort of throwing enough monkey feces at the wall and hoping something sticks. I feel like even they know this ER is going to be good. I feel like they know SoFi is very established on a positive trajectory. These deposits aren't going away, these direct deposit customers. Gary's argument was, hey, they switched to SoFi, so it can't be that hard to switch. Does he know that they were all doing direct deposit at their previous bank? I mean, a lot of these consumers were probably earning 0.01%. Tannor makes that point. That's what the mega banks are still paying. They're still paying people essentially no interest, and people are figuring out that there are alternatives in the fintech neobank space and that they're basically getting ripped off. And he's like, well, that doesn't matter because my 3 brokerage accounts pay me more than SoFi even. It's just that's an irrelevant argument. It's a complete logical fallacy. It's a red herring. It's just has nothing to do with anything. That's not what we're talking about. We're not talking about, cash sitting in your brokerage account. We're talking about bank deposits. So why don't you at least stay on topic and be honest instead of trying to laugh and brag? I make more than that. I'm with some big brokerages and Schwab, and they all pay more than that on what I have sitting in my brokerage account. It's like, but that's not what we're talking about, is it? That's an irrelevant distraction, and that's kind of the tactic you've been using here all along. Guys, let me get a sip of this delicious cold coffee. Pardon me. Hello and welcome, and hello, Anthony Walker. Yes, I'm early today, and also incoherent, tired, sleepless. Gorgon comes across as a dishonest, uninformed ass. Yeah, much like most of the analysts that hit SoFi like this. They're just not, they're looking for what they want to see. I feel like I'm trying to look for the negatives. And I understand what they're talking about with uncategorized expenses. There's almost $1 billion if you assign those. But how is the business making money overall? And I mean, I think his argument is like these non-cash items, it's not legitimate. But Tannor makes the argument a third party marks those loans, and SoFi really is, it's in. I've made this point before, and I wish they would have pushed back a little on it. How does it help SoFi and SoFi management to essentially lie about the value of their loans and mark them wrong and mark them much more positively? Management is not looking to pump the stock this year or next year. They're looking to pump the stock 2026, 2027. That's how they get all their money. So if they're lying about loans now, they're going to be found out by next year. They're going to be found out by late this year, particularly if we have a recession, as Gary says, particularly if unemployment starts to tick up. But that's also just, not really happening. The economy looks strong to quite strong, much like my portfolio. So a lot of the things he's saying are, likely to happen, that SoFi is going to be tested in with these headwinds, with the high unemployment, with, he's arguing, hey, just COVID, the government just pumped a ton of money in, so no one was defaulting. But the flip side of that coin, how you have to look at that would be that should also, lower demand for consumer loans, but you see demand for SoFi's loans. So why do people want to take on consumer debt if everyone has so much COVID money left in the bank? He's arguing, SoFi's never faced a tough economic environment. I believe SoFi's faced extremely tough circumstances, maybe not the particular ones he said, but what's more of a threat to the business? Wiping out your entire business model as a student lender, or, temporary macro fluctuations? If SoFi can handle what they've already handled, I think they can effectively hedge against interest rates. And that's the other thing I would argue, is that Anthony Noto is just a lot smarter and more capable than Gary Gordon. His team is. He's not as lazy. He's not as intellectually dishonest. He's not as smug. He's not as arrogant. He doesn't talk down to people in a similar way. Anthony Noto's had a 30-year career too. Does that mean he's always right 100% of the time? Does that mean his anecdotes about, a long distance calling card company or some mortgage company you missed a call on in 2003 or 1998, Does that mean Noto doesn't have, more relevant experience than you, know a million times more than you about his business? Um, so if your argument is that 30 years experience makes you right, Exhibit A, Anthony Noto, my biological father. Dad, by the way, I wait for you up Foley Field every evening at sundown thinking we're going to have a catch, and you never show up. But that's okay. I forgive you. As long as you can pump this turd, get the price up to that $25 level, 2026, 2027. All is forgiven, Papa Noto. Who's watching this turd, guys? I'm going to bail out of this broadcast, but I wanted to go over my plate really quickly. Some of these arguments, he's like, no one else had this business model trying to cut costs, drive competitors out of business. Absolute nonsense. He's like, unemployment, low rate economic weakness. That's when SoFi is going to be tested because they're just going to completely stop paying. They went in and talk about the coupon rate, how they have to weaken their lending standards or pay more. That's the only two ways because there's no secret sauce. He doesn't understand the secret sauce. There's nothing unique about the business model. It's just a consumer lender. Again, I just believe that's absolute drivel. I mean, most of these you can just refute on your own. Then he talks about, Tanner's talking about, well, they haven't seen weakness in the FICO scores of their borrowers. And again, all he can do is, when presented with a fact that is contrary to his opinion, his reaction is always to say, well, that fact doesn't matter. Because of an anecdote from 25 years ago, early in my career, I'm going to tell you why all the positives you can cite don't matter. He's like, because FICO scores won't matter because people can have a life change. So when they take the loan, and he went into this example of some mortgage company where he botched the call or whatever it was. So, SoFi's customers could have great credit now, but then when the economy changes or they become unemployed, they just stop paying their bills. And of course, that is the risk with defaults. But if your customers are more qualified than, say, Capital One or Bank of America or these other companies that Gary likes to fillet on a regular basis, why would SoFi have more weakness than those companies when their, customers have better credit and income profiles? It doesn't make any sense. But he's like, they could have a life change. They can have a life change and stop paying their bills. So he doesn't like speculating forward on numbers, which can actually be projected, which can actually be forecast, but he's projecting forward that SoFi's well credit qualified customers can just have a life change and just stop paying their bills, which is of course true, but it's completely speculative, impossible to measure, and just an irrelevant bunch of bullshit. I mean, that's just what it is. It's FUD, it's bullshit. So he talks about the high mortgage example. He's talking about, denominators and numerators. He's talking about fractions. I think he's hooked on phonics. He's basically talking about how they're growing loans very quickly, which is basically adding to the denominator. The numerator's not growing as fast. When they cut back on the loans, it's going to effectively affect that ratio. And that's a true point. I mean, if you're growing the loans right now really quickly, they're not going to default immediately. So it kind of takes time to push through and get that ratio. He's like, this is a venture company, so I can have no opinion on the value because I don't value things forward. I'm like, it's like, then why are you doing it? But you are valuing it. Don't you understand what's implicit in your article, that the last one, that it's a strong sell because consumer banking is shrinking? It's just absolutely ridiculous. Tannor makes the point, but what about taking existing market shares? Like, this is a giant market. This is almost an infinite market. It's trillions of dollars. SoFi's doing, $2 billion a year in sales. Like, they could multiply SoFi by 10 times and still be a nothing burger, still be 20 million in sales. I mean, in terms of the mega banks, this company could literally 10x and still not challenge Chase. Like, Tanner's making the point. We're not saying, nobody's saying this is going to put Chase and Bank of America out of business, but those are companies with $400-500 billion market cap. I noticed the other day, JP Morgan actually was bigger by market cap than Tesla. And that's probably appropriate because JP Morgan makes a ton of money and Tesla really doesn't yet. I'm still a Tesla investor. I'm also a JP Morgan investor, believe it or not. I had a beautiful run up here buying JP Morgan, like 130s, and just, it was undervalued. JP Morgan's a very well-run company. Out of all the mega banks, I think they're, really the only one that's well managed. they talked about, Wells Fargo and, cross selling. It's just so ironic. Like Gary doesn't mention the fact that their executives should have been put in prison for their cross selling activities because they were cross-selling people without their knowledge, without their permission. I know he's talking about earlier on when Wells Fargo was trying to sort of get into that diversification. I remember they had all those commercials on with the stagecoaches, but isn't it just indicative of how out of date Wells Fargo is? Everything harkens back to the stagecoach, the guy riding shotgun. It's like, does that appeal to young people? Does a bank that is literally a criminal enterprise, stealing your identity, committing rampant fraud and theft and all these other crimes they're just able to get away with? Is that where young people want to go? Of course not. He goes on to talk about these mega banks. Let me just continue on with my plate, guys. These are so incoherent. He's talking about, he's really focused on real estate, and he's talking about Redfin. He's like, Redfin talked about disrupting. Redfin talked about growth. Guys, I'm going to get you out of here by the time the market opens. I know most of you have bailed out to go watch Uncle Bruce, and who could blame you? But he talks about Redfin. He talks about, disruption isn't necessarily good because Redfin has lost money for every year of 15 years they've been public. Well, SoFi's only been public for 3 years, and they're already making money. So I just don't see how that's relevant. I don't see how you could say disruption isn't good. And he doesn't even think SoFi is disrupting anything. So it's kind of, he pivots his arguments constantly. But will SoFi kill B of A? Of course not. But SoFi has not even started to scale yet. I mean, let me see if I can read this. So he's talking about SoFi management. He's talking about Noto. I feel like Noto knows infinitely more. He's talking about don't trust management. When management tells you what they're going to make in 2026, they have no idea. First of all, they're projecting 55 cents to 80 cents, so it's a big range, and I think management has a very, very good idea. I think this is what Noto does. I think this is what LaPointe does. I think they have a team that projects these things, and I think they've been very good at it up until now, and I don't think there's any reason to assume they can't do it. Some things can change. The wind has been at their back. This, again, Tannor points out, this is absolute nonsense. I don't think a company has faced more headwinds than SoFi. It's just incredible. We've talked about this, the pivot, what management has been able to achieve. So Noto laying out this business plan to the board 6 years ago, going about executing it, the art of war, burning the boats. Noto's a leader. Gary Gordon is more of a conservative follower. He's not out to hit a home run. He's probably done very, very well with his extremely conservative investment strategy, but he doesn't believe in growth stocks. He doesn't understand growth stocks. He doesn't understand technology. He doesn't want to understand technology. He does not have the time, the inclination, the energy, the intellectual rigor to go ahead and research what Galileo does. It's not that hard to understand, actually, not at all. I've done research on it. I understand it. I'm not, a huge tech person. I understand what Technesis does. I understand what Galileo does. I understand how they were combined. There's actually some, there's some sources you can go to. And if you don't understand it, listen to the questions. Talk to the management is telling you tech is going to grow. It's like tech shrank last year, but again, he just ignores all the facts. Management told you why that pivot was happening, because they really can't scale the company on the back of these smaller customers without their membership bases. They're moving to big customers, talking about the major proof of concept with a top 5 financial institution. You just ignore all that. And to ignore all that makes it impossible to put a valuation on the company. But if you're going to write articles saying SoFi is a strong sell, and you're going to bang on the table saying SoFi is a strong sell, in the midst of this major, major short attack, coincidentally, you just kind of come out of the woodwork. And Tanner's making the point, you don't even have to cover SoFi at all if you don't understand it. It's like, well, I saw problematic things in their quarterly investor presentation, so I wanted to drill down into the numbers. And what'd you find? He's like, well, I found they were hard to find. He's like, so that's your argument, is that the numbers are hard to find in the text and it's located in a footnote? He's like, I find them, I break them down. He's like, it's not that hard. It's like, I can do it. Watch my videos. You'll see the numbers. You'll see the breakdowns you're talking about. So what's the problem? He's like, well, the problem is it's on page 172. It's like, well, maybe they just put things in a certain order and they assume you guys are professionals and they assume, the analysts who read these can actually find the information. They go to the investor calls. They can ask us questions about it. We're quite accessible. Noto's being interviewed today. They go to various investor presentations. They take questions from all the analysts. I think SoFi management is very transparent. They give a lot of information on their business. They want to give a lot of information on their business because they think, as I do, that they have a great business here. But anyway, I want to just continue, try to get over some of my incoherent notes. He's talking about return on equity, how it's not good, but return on equity is the basis for everything SoFi does. Anthony Noto's talking about how everything they do is crafted to give more return on equity. That's why they held loans at a certain time. That's why they'll sell loans at another time. It's just doing whatever is best for the shareholder, for the business to grow. Tanner's talking about, basically you only highlight the negatives, you ignore the positives. That was on full display during the interview, with the red herrings, with the logical fallacies, with the sort of smirking, laughing, chuckling arguments. And then every time going back to hey, I have 30 years experience, kid, you just wouldn't understand. Tanner is basically like, kind of he got a little more confident. I think he's like, I do understand. He's like, you may understand things, at a level of a professional, but you don't understand this company because you haven't done the work to understand. He said it last time. He's like, I haven't done nearly a full analysis of the company. I don't understand the company, but I'm going to tell everybody it's a strong sell. Does that make sense to anybody, or does it just put more evidence behind the fact that there's just endless FUD? So they're talking about it's a zero-sum game. I don't know. I can't read most of my writing here, but yeah, they went into Wells Fargo, and it's just such a stupid example for Gary Gordon to cite Wells Fargo on the finance, like also citing Capital One on. AI. Capital One's making such an aggressive move into AI. Do you think Bank of America's never heard of AI? Their product Erica is so compelling. It's not. I've got news for you. It's not. Bank of America is not a young company. Young people don't like Bank of America. Young people don't want to use Erica. Young people don't want to bank at Marcus. Young people have never thought about calling Discover Bank their, main bank or financial home. Young people have never thought about calling American Express Bank or Ally Bank. Young people think of Ally as a place, their grandma got an auto warranty on her Buick back in the 70s or 80s or whatever. Young people think of American Express as a credit card. Young affluent people. Young people think of Discover as a credit card. Young people are starting to think of SoFi as a one-stop shop for all their financial needs, and that's something nobody else is achieving. Anyway, guys, let me get just through a couple of more minor points. I think I actually ran out of room, so I wrote... he's talking about the segments are losing money if you sort of... spread out these uncategorized costs. Well, then how is SoFi making money already on a GAAP basis? They're only a couple years into the growth story. They were just selling, $500 million like 4 years ago. 1 billion, 1.5 billion, 2.07 billion. And people are talking about, 2.2 to 2.4 this year. I think this year is going to be much, much higher than that. I don't know exactly. I mean, I can't predict the future, as can't SoFi management, and as cannot Gary Gordon. Of course, Tannor can predict the future, but he's very, very smart. He's smarter than most of you. He's like, not a risk to take. It's basically a credit story. It's not a growth story. It's not an interest rate story. And that's what they have to say, guys. That's what the bears have to say. The bears are dishonest. The bears are out to hit the stock. I think the bears are basically working with the shorts. You look at the massive short interest on the company. There's massive borrowing again today. It's been almost every single day. Obviously, the shares on loan in just a few months have gone from 80 million to 255 million. The short interest has gone from 8-9%. I believe it's now up over 20%. And I believe, quite frankly, that the short interest is the highest that it's been ever on the SoFi stock. And you say, can you support that, you big turd? Can you provide any evidence? Because Gary wants evidence. The last point I'll make is like, they have to be hedging rates because he's seeing that in the numbers. He's seeing how good at management is at hedging. I think if this guy was at all honest, he would acknowledge, Noto's a top guy. He can hedge this stuff in his sleep. The SoFi team, top people, well paid. If you even took a look at the leadership team at Galileo, again, you're going to see people who design products for Google. You're going to see people who are coming over. The banking guy was from USAA Bank. You're going to see White. He's just appointed chairman of another British fintech. These guys are absolute professionals. Apple, Google, USAA. It's an absolute all-star team of talent. The notion that they can't get things done into the future. I mean, if you're just too lazy to take a look at it, that's fine. But Noto can effectively hedge all risk, and he does. And it's very, very clear by how steady, SoFi earnings and numbers are. But this is just one last thing, guys, and I'll go ahead and get you out of here. But I just want to make this point. If you go ahead and take a look at the short interest, and let me just pull this back to all, you can see, guys, the short right in here, this is the highest short interest ever on the SoFi stock, and this was back in May, sort of mid-May to late May 2022. The stock was shorted, they estimated 20.6%. Now they've got 19% right now, but if you look at what's actually happening, so you could see, guys, this is shorter. This is more shorting than any point in the history of the stock, with a very brief exception here. And I would argue it's already higher than that, because every time the official report comes out, the short interest has gone way, way up. And we see the constant borrowing. So look at the difference between this number. Basically, the short interest, every time the official report comes out, starts to catch up with the shares on loan. And I believe it'll do so again. And you see the massive increase, guys. If you just look, say, the last month, if you look at the last month, the shares on loan have gone up 110 million shares, or 75%. Utilization has gone up 60% in the last month, from 51% to 83%. Is there going to be a huge dramatic short squeeze like Carvana, maybe a firm? Probably not, because short interest is probably at the most in the low 20s. But the fact is this, guys, you short a stock that's this good with a company doing this well, I believe you do so at your own peril. I believe a short mechanics can work with it over a period of time. As institutions start to come in, it gets harder and harder as shares are taken off the table by things like this note deal. I believe management is playing chess. I believe these shorts are in big trouble. But again, if you're a total short weighing loser, every problem looks like a nail. So you're basically going to try to hit the stock. Let's get a look at the live short interest. Still sitting. It's actually going up. It was at 2 million just a few minutes ago. So again, borrowing heavily in the pre-market for shenanigans today. More shorting. So borrowing already pre-market, another 3 million shares. They're just shorting the hell out of the stock just every single day. I guess they're looking at bad comments from the Fed. They're probably looking for a bad ER. I think they're looking for SoFi to slip back into making a loss this quarter. I just don't think there's any way that's going to happen. Management always likes to come out toward the end of the quarter. Last couple weeks, last quarter was CLP3. Coming out at the talking to the Chode at the UBS conference, the old Chodo. This time it's Noto coming out talking to the catch-all wonder Kramer. He's completely schizophrenic on the stock. He loves SoFi. Noto one day is almost crying. He's our friend. I love Anthony Noto. He's like, what's going on with the stock? His mind chases price action. Kramer's like, what's going on with the stock? What's going on with the stock? More importantly, Kramer, what's going on with the company? What's really going on? Guys, this thing is going nowhere fast. Benji, good points, Maria and Ryan. I agree, Benji. At least someone's making good points. Certainly not me. Good afternoon. Uncle Primo is afternoon, I'll have you know. Hence, good afternoon. It depends where you are, guys. There's many time zones in this big, beautiful world. Hence the fence, stamp keyboard. Oh, you guys are funny. Alberto, ruler at the ready. Danny D's for president. Let's go, son. What's up, son? Knuckle up, son. Knuckle up, son, knuckle up. I highly recommend before every trading day you listen to Stu Stone and Jamie Kennedy's seminal rap song, Knuckle Up. I also recommend their song they did with Bob Saget. Rest in peace, Bob. He did a hilarious thing called Rollin' with Saget, a rap with Jamie Kennedy about Bob Saget just shooting people and doing blow in clubs. Alberto, spanking time. Guys, I don't want to hear about your personal lives. Gary Gordon type of guy, a short, great American. No, he's not. He's the type of guy who will talk about shorting SoFi, but he's not the type of guy who will short SoFi because I think he knows he's going to lose money, or he knows there's a very, very good chance he would lose money. Alberto, your dad, Uncle Primo, says, I need the ruler. We can begin now. I'm here. Danny's off my spring. LOL. Tannor did a great job. I completely agree, Maria Powell. I think Tanner's interview this time was far more effective than last time. And I love Tannor. I love his content. Like the show. I just think he's a good-natured guy. He's not the kind of guy who's going to, go right for the throat and attack somebody. But I think he was very, very effective, as you say, at exposing these arguments, their lack of substance, their lack of logical consistency, and every other thing. So completely agree with you on that one, Maria. Tanner Leah, let's go. 101 people. Do not like and sub, guys. There's almost nobody watching. I think everybody's watching Uncle Bruce. The market's opening up, guys. So I'm gonna go ahead and close this thing out. Mr. Premium of the option is here. Good to see you. Leo Longevity is here. Another short. He says he's not short, but he kind of screams like, do you have an actual short position? He's like, Rhea Powell, Mr. Potato. You guys have all kinds of things going on. Talking to each other. Potato in the house. I know I do look like a giant potato, but that's kind of beside the point. Good to see you guys. Dude Ass Face is here. What's that? Buy more SoFi? I didn't say anything, Jason Law. Guys, I am not one to give financial advice. If I were, I would say buy SoFi, buy SoFi, buy SoFi, buy SoFi. Buy SoFi, not advice by SoFi. Thank you, Jason Laws, for clarifying that. Jason Laws is not one to give advice, but if he were, I think he would probably tell you to buy SoFi. But Jason Laws said it, and he's got laws right in his name. So if you want to sue somebody for giving bad financial advice, sue Jason Laws. He sounds like a lawyer, or at least he probably has a lawyer in the family with a name like Laws. Anyway, guys, that's a pretty lame bit. Need more SoFi shares. We all do. Samwell54, ready to steal paper from the shorts. Me too, Hybrid Duncan. You should get Gary on the show, not to have a discussion. I would love to, Mikkel. Invite him on. I'll yell at him in Spanish. Crockett Red, Countdown, Liftoff, Rocket Chips, Jason Law looking for rocket ship emojis. They are not entertained, not a lurker. It's clear nobody's subscribing to this turd, and I appreciate that. Do not like and subscribe. My first Stinky Bell started at 683. Well, that's okay. Don't worry. They always push down at the open. It can still go back up. Just depends what institutions. I don't think institutions are going to push up this week. Just doesn't look good for the options. Probably not next week. I think it's going to be the following week into April, and we'll see a push-up. Why even get out of bed, Paul? Because you don't know what's going to happen. How can you predict what's going to happen? Because you don't have data on it. You don't have, Moses didn't put it into stone tablets, the numbers. So how can you invest on the basis of what management says? Never trust management. It's just like, trust but verify, of course. Trust but verify. Look at the numbers. Do the numbers make sense? Do they keep growing? Good morning, First Mate and Admiral. Good morning, Stockman Mark. Thanks for joining us. Ukeko, Danny Deals. I'm here, Ukeko72. Good morning, Ukeko. I am up early, Stockman Mark. I was up at 4:30 to talk to you turds with this incoherent word salad. Yes, it's wartime. SoFi will hold 14 by the end of the year. I certainly hope so, Alberto. That would be a double up, 2x in 1 year. It doesn't happen that often, but remember, SoFi went from 450 and doubled basically in a month. So anything can happen. Now, will it hold those gains? Very hard to say. Yes, Anthony Noto will be on 6 p.m. Eastern. That's 3 p.m. my time, which is the only time that matters to me. The rest of you turds can pound sand. Kings, yep. Thank you, Six Kings. What a better guy to lead the turd fleet than a very own Danny Deals. Yep, I am the head turd, Stockman Mark. If you need a big fat turd, I'm your man. Nala, what's up? You guys talking to each other. Jacques Treehorn, I think he was using PE ratios. Yeah, that's the thing, Jacques. That's what I'm saying. All of his arguments ignore the fact that SoFi is just starting to scale, that they're growing rapidly. It's a growth stock. That's not how you value it. This is their first profitable year. And analysts are saying, 5 cents, 6 cents, and then even the Chia Pet raised his Q1 outlook to 2 cents. So how can the whole year be 5 cents? I think Tannor is at least right 11. I think more Tevis could be like 16 cents plus. Yeah, it's not fair. It's not reasonable. It's not, it's FUD. It's FUD spreading, Jacques. And I think it's really intentionally dishonest. I mean, how can you apply value metrics of mature companies to a growth stock that's only a couple years old and growing rapidly and already making a profit? It doesn't make any sense. Credit risk, I agree with you, Bart M, is a big concern. If we start getting a ton of defaults and the economy falls apart on the consumer side and consumers get in big trouble on their debt, that's going to be problems for Sofi. You're absolutely right, Bardem. You're on top of that. Yeah, Jacques, it's a ridiculous, dishonest comparison. I agree. Uncle Bruce having technical issues. That's probably why a few people are still watching this turd. Yeah, it's going ahead with CNBC's Becky Quick, Joe Kernan, Andrew Ross Sorkin. I think that's who's on it there. I don't really watch this stuff, guys. I'm working all the time. Fuck that guy and kiss Noto's ass. The profanity, I love it, Jacques. Noto never sells. He looks like Chiavarini twin. Yeah, I agree. We can pull up the tile here, but you have Ben Assfleck over here, guys. You have Ben Assfleck and the accountant just crunching numbers. You see him over a spreadsheet, like his furrowed brow, his giant simpleton forehead, ready to explode. Here you see Ben Assfleck when he's saving the world from a meteor. Here you have Tannor, our intrepid hero, our protagonist in this story. Here you have Simple Jack. Here you have the dad from Richie Rich, who looks strikingly like Simple Jack. And they're also both rich because this guy makes 15% on his value stocks. No risk there. It's almost no risk. It's 15%. Anybody who's wealthy, can tell you can't make 15% with no risk. It's just, even some of these like closed end funds and stuff, they'll tell you they're going to make 15%, but there's a lot of expenses. Some of them will even tell you they're going to make 20%. My experience is the best you're going to do is more like 10 after expenses, but your mileage may vary, but this guy's making 15% with no risk, my ass. That investment doesn't exist. And I know some of the stocks he's talking about, they're not without risk, not at all. I have a feeling I know where he's going. And again, I think it's just incredibly disingenuous. Anyway, guys, here's Simple Jack. Remember, Simple Jack's a bad actor. This is bad acting. I almost thought at a certain point he was going to break character because some of the things he was saying were so ridiculous. And this guy, this is a bit. I'm going to give, Seeking Alpha the money back for these articles, and I'm just going to have a good laugh about it because I don't need the money. I have plenty of checked shirts. I have plenty of, money for coral paint and accent paint in my room. But I just don't understand the call. I don't understand why this guy is rating Sofi strong sell when he can't even put a value on the stock, which, if you're rating a company a strong sell at a certain level, it presupposes you put a value on the stock, but he didn't. He just doesn't like the company, doesn't like the structure of the financials they put out. All the information's there, but he doesn't like the fact that he had to look for it. He wants you to put all the bad information on the front page and just splash it out there and scare the hell out of everyone. Does that make any sense? Of course it doesn't make any sense, but that's the world we're living in. Of course, see what the Sofi stock is doing, kind of fumbling, stumbling, mumbling, struggling here at $6.93. You saw the pump, you saw the dump, but the peak's just getting us back. So as long as we didn't see a major sell-off, days range down to $6.87, no big deal there. Again, options are telling me the stock is not really going to go up this week. If you're going to buy shares, I would buy on Friday. I think that's probably going to be the low point. I think they're going to probably push down. I don't see any reason they want to push really down to 650, but I didn't see the reason they wanted to push to 7 last week, and I was wrong then, so I'm probably wrong again now. But what else is new? Klaus is here. Klaus made a really, really good comment in terms of the analysis. If you guys have a chance to read his comment earlier, I'm not going to go back because I can't go all the way to the top, but it was very insightful, as Klaus often is. Emotional ownership in the high turns. I ain't wheeling this until wheels fall off. Alberto works them options. He knows what's going on. 122 people watching. That was a long time ago, not a lurker. There's 70 people, and those 70 people have no taste, no sense, and are basically losers. users. Tannor, Gordon, Noto need to do a show together. Yeah, absolutely. He would never come on with Noto because this wouldn't work with Noto, because Noto would be like, hey, you have 30 years experience. I have, 40 years experience, and you have this, I have this. Like, I think I know what's going on in my own company. And Noto could just refute this point by point in his sleep, and he would. But, these gutless, dishonest turds, they wouldn't talk to Noto. I think he goes on with Tannor because I think Tannor basically this time just, in so many words, the look on Tanner's face was, hey, you're a dishonest asshole. But he's saying, like, but you could see the look on his face was, hey, this doesn't hold water. This doesn't pass the laugh test, doesn't pass the smell test. Hello and welcome, guys. Welcome and hello. It's Un Poco Moss. Gary forgot the market is forward looking. Oh, of course. Ryan, the whole thing just made no sense. The whole thing was just a big logical fart. It's just crap in the bed. Is Gary the guy real? He's not AI. Could be a Tesla bot. Could be a Tesla bot in a really lifelike mask, like Face Off. Could be John Travolta, switching faces with who was the other guy? I can't remember. Nicolas Cage. What the fuck was that? We don't want to wake up Princess J. We certainly do not. Growth is bad. Yeah, growth is bad, especially if you're making money on every dollar you're bringing in. You're making more money marginally every single dollar. SoFi better be profitable. I'm getting nervous. Don't worry, Andrew. Noto's going to reassure you this afternoon that SoFi is going to make a profit this quarter. I can absolutely assure you of that. Banks are the core of the economy. SoFi threatens them. That's the way I see it. They're certainly taking market share, Klaus. There's no doubt about it. The numbers show they're taking market share. They're making money on those deposits. They're making a big spread. Yes, if defaults go through the roof, they're going to be in trouble. But I think they're planning for that. I think they're planning for the worst. Short turds are getting in your mind. Yeah, don't worry about it, Andrew Choi. Guys, the short is a debt. The shorts owe a debt to longs unless they can find that fundamental weakness, which I don't believe they can. They're going to have to pay that debt at some point. What's going on, Oprah's Big Wet Cave? How is the musty, crusty home of Stedman doing, buddy? Oprah's here. We all love Oprah's Big Wet Cave because it's our comfort zone. It's our safe spot. Perhaps if Gary had a home in Oprah's Big Wet Cave, he would feel that love that he's been missing, and he wouldn't feel the need to lash out at things he doesn't like and doesn't understand. But he doesn't hate growth on his own stocks. Well, he actually does, because he's talking about, how he invests. He just doesn't. He missed everything. He missed Amazon. He missed Google. He missed everything that's forward looking. I mean, a lot of these companies, their multiples are still crazy, but he missed the price action. So yeah, he doesn't hate growth, but he hates growth for stocks that he doesn't like, or maybe that he's being paid to write articles that says he doesn't like. I don't know. He's saying he doesn't have a short position, but I don't know. Someone's paying him to write something. I guess Seeking Alpha just values his opinion. I don't really understand why in this case. I guess because he's had a long career. He knows what he's talking about. Yeah, I mean, he's right. He doesn't cover growth. He doesn't cover fintech. He covers like mortgage companies, consumer finance companies. And that's, what they want you to believe, that SoFi is nothing more than a lender. Yeah, he's a total smug jerk. That's kind of the impression that I got. He's disingenuous, dishonest, looking backward, not being honest about the data. It's like, oh, I can't find the number. And Tanner's like, that's right here. I found it super easy. He's like, well, Danny calls out the BI. I try to, Klaus. Thanks, buddy. Would love to check in with some opinions on him. Why his intentions steering in the wrong direction? My question is, if the market goes into recession, how will this affect SoFi? It's going to be, bad for SoFi. A recession is going to be bad for SoFi. I mean, there's just no question. We don't know how bad, and we're hoping we're not hoping. We know management is hedged against that possibility. They're trying to take the risk out of the loans, become more selective, make less loans. Every unfounded doubt seeds the brain to doubt. I learned that 30 years of investing. You're absolutely right, Klaus. You have to look at things as a sober, rational person and look at the positives, look at the negatives, make a good decision, and then be confident. Don't just constantly question things for no reason. Been a long time. I get your point. There's those that leave too early for FUD. Do not sub and like. Do not sub and like. Analysts only analyze. Note is responsible for executing. Yeah, I mean, if you look at a guy like Gary Gordon, you could tell he's not a leader. He's not forward thinking. He's not about innovation. He's not about problem solving. He's simply about a rigid structure of looking at things and that's all his mindset is going to let him do, is look at things one way. And it's just a shame that it gets so much press. I'm giving it press, but nobody watches my show anyway. So what's the difference? Vagabond Jones, my favorite nephew. How are you today? Ian Blockwell, neck deep in a leap. Good for you. Balls to the wall, neck deep in a leap. Clement Lim, only institutions. Yep, you're absolutely right. Retail cannot punish the shorts. We just don't have the money, and collective action is illegal. I can't call for collective action. So yeah, and nobody would listen anyway. I don't have the juice, not a lurker anymore. Podo is Mr. Premium. Okay, I thought you were calling me a potato. Thank you, Maria Powell. Thank you for that clarification. I was going to go do some crunches. 96-minute rant. Sorry about that, guys. What's Gary's track record? I really don't know. I don't think he has any track record in this space. He obviously doesn't understand it. He doesn't analyze it. So I don't think he has any track record with companies similar to Sofi. Guys, the Sofi stock down on volumes not too high, down 1 cent on the day. I got to get the hell out of here. I got to go to work. But thank you for joining me. I highly recommend Tannor's video with Gary Gordon if you can stand it. I think it just illustrates how ridiculous and stupid some of these bear arguments are. And if you want to see that on full display, I can only recommend Gary's Sofi analysis, such that it is. It really isn't any analysis. He just kind of a crotchety curmudgeon talking about how, he had to get out his reading glasses to find the numbers. He actually had to do some research, and he just doesn't like to work or think or anything along those lines. Guys, it's Un Poco Moss. It's Danny Deals. Would like to thank Not a Lurker J Money for sticking with me this whole time. Sorry this video is so long and so horrible, but I appreciate you guys. Have a good one. Sofi Green, rocket ship emoji. Peace. I'm out.